Welcome to the market update, guys. I just wanted to do a really quick video just to cover why I think Bitcoin is still going to continue up over the next couple of weeks. And I just wanted to explain the signs I'm seeing what potential signs I'm seeing that the price is going to increase from here. So the first thing I want to cover in this video is it's probably the most important thing one of the most important things to understand when you're going to invest in Bitcoin and other cryptocurrencies, and it's supply and demand. And what I mean by a supply and demand is I've got it on the screen here. The supply and demand of an asset. So when the demand, which is how much of an asset a consumer wants to buy, outweighs the supply, which is the amount available to purchase, usually we're going to see a higher price in an asset. So, for example, like if you think of gold or silver or something like that, when a lot of gold miners across the world, they all strike gold simultaneously, and a lot of gold is found, you can see the price of gold actually drop because there's an oversupply. And vice versa, when there's, low supplies of gold or any other like commodity, for example, and the demand outweighs the low supply, you're going to see an increase in prices. And this is relevant to Bitcoin as well. So if you go to coingecko.com and you type in Bitcoin, you can see a little bit of information about it. And down here, we've got the max supply. So basically, that's the total amount of Bitcoin there's ever going to be. So there's only ever going to be 21 million Bitcoin. And the reason this is so important is because if you understand how Bitcoin is created, basically, to just give a brief explanation, people use their computing power to connect to a network, and they provide computing power to solve like complex problems, and all these networks are linked together. And when the computer solves these kind of problems, it rewards them in Bitcoin. So everyone that participates in the network and connects their computer up to this and provides computing power can receive Bitcoin as a reward. But there's only a certain amount that they can get per block. So Bitcoin moves in blocks, and a block, it's just a certain block has a bit of code, and once all the different people on the network, work out and problem solve that code, the block is complete. They receive their reward and they move on to the next block, basically. So I've got this little graph here, and it's called the block reward history. So it's got the year, and it's got the estimate of the amount of Bitcoin that is going to be generated in that year. So as you can see, it's got these numbers here of each consecutive year from 2009 down to 2024. And as you can see, 2021, 22, 23, and 24, we're going to be adding around 328,000 Bitcoins to the supply. Now that's not extra. So that's going to be 328,000 of the 21 million maximum total of Bitcoin. So why is this important? Well, if there's going to be 328,000 Bitcoins added into the market this year, if we can kind of figure out how much of that is being brought, or if a large company is buying a majority of that, if we can figure that out, it's going to give us a pretty good understanding of some of the possibilities in the future. So if you guys don't know what Grayscale is, Grayscale Investments, I'll just type it in on Google quickly. So I'll just click this article. I'm not going to go into it too much. So it says here, Grayscale is the world's largest Bitcoin and cryptocurrency asset manager. It's taken the investment world by storm and helped propel crypto onto Wall Street. It says they're managing over $5 billion in assets. Now, this is from August the 30th last year. They're probably managing a lot more by now. So the point is, this is probably one of the largest, if not the largest company investing in cryptocurrency. So if you go to buybit.com/grayscale, you can actually see what Grayscale owns right now, what cryptocurrencies they have, how much they have, and the change of their portfolio over time. So you can see at the bottom, we've got Grayscale. It's actually got a total portfolio of $27 billion. So since that article, it's actually increased, very substantially. Now, the important thing to note here is up here, we've got Bitcoin here. We've got Bitcoin. They're holding $23 billion of Bitcoin. The most important thing you can see here, 24-hour change. They've actually brought 16,200 Bitcoins, 7-day change. They brought 26,100 Bitcoins. So that's actually quite a lot of Bitcoin, guys. That's, let's work it out here. If Bitcoin's roughly, 36,000 times 36,000 times 26,000, they've added around, $940 million of Bitcoin to their portfolio this week, which is, quite a large amount. So as I showed you before, here we're estimated to generate around 330,000 Bitcoins this year. So Grayscale has already in the last 30 days added 60,000 Bitcoins, and we're just starting the year. So they're buying Bitcoin faster than it's being produced. So as I explained here, supply and demand, when the demand, the amount of the asset consumers want to purchase outweighs the supply, the amount of the asset available to purchase, it's in history, it shows us that the price is going to increase. So I just wanted to go over this really important information, because a lot of people, they don't realize this, and it's the most important thing when understanding the direction that Bitcoin's going to go. Doesn't matter what you're going to see on the chart. If there's, $1 billion being brought a week, it's not a seller's market, it's a buyer's market, and the probability is that we're going to go up. So I want to go over the actual price chart now. And if you don't know what a Wyckoff range is, after this video, I'm going to post a link to my TradingView. You can go onto my TradingView, worth the risk. I've just posted a brand new idea about the Wyckoff reaccumulation range. And basically, when markets are moving upwards, you can see these blue areas is where the market was moving straight upwards. You have these pauses in between the movements, these yellow areas, and they're called reaccumulations. That's when the market stops. More buyers actually come in and start buying it up while the price stops. And eventually the buyers outweigh the sellers, and we see the price continue up. So these yellow areas, they're called reaccumulation. So basically, we've seen Bitcoin currently, and we had this massive run from 20,000 all the way up to $42,000. It's been crazy. And now we're finally, after all that straight upwards movement, basically we're starting to move sideways. And what we have here, it's called a potential Wyckoff reaccumulation range. And what that is, the Wyckoff reaccumulation range, it's a way traders and investors and companies with extremely large amounts of money, billions of dollars, if not millions, they trick people like me and you into panicking and selling our Bitcoin or whatever asset we have. They trick us into selling, and when heaps and heaps of people sell in fear, it generates massive selling pressure, and these guys have their buy order waiting, and that selling pressure triggers their buy order, and then the market reverses in the other direction. So the Wyckoff reaccumulation range is a potential way to identify these reaccumulation phases in the market, which is what I showed you here in this image in the yellow area. So we're looking to identify the yellow pause in the market before we continue up. So in this Wyckoff range, there's all these different characteristics. Basically, we form these two kind of sideways channels. So we form these two areas, resistance and support, and the price kind of moves between them. And what happens is people buy at the bottom of this blue area, and they have an order under here, like a stop loss. So if the price comes under here, it's automatically going to sell so they don't lose any more money if it continues to drop. But these big players, they know this. So they form this range knowing that the buyers are going to get in at the bottom. And then towards the end of this pattern, they actually try to get the price to go underneath to trigger all these stop losses to get all these people out of their position so they can get a bigger buy order in, and then the price reclaims this range and continues up. So this is my current chart on Bitcoin. After the video, go onto this example on TradingView. If you want to learn about this more in depth, I've got a bit of a write-up here, and you can go on the idea. You can see these little pins. If you go over each pin, it's going to explain to you how to identify this and the kind of important characteristics. So back to the Bitcoin chart. Basically, I'm just going to make this a little bit more transparent. So basically, you can see we formed, this area up here, and we formed like another kind of area down here and over here. And the price came down from here. We had a bounce, and then we came back here, and this is where we it's confirmed support. And then we finally came back up to this area, and we showed that this area is still a strong resistance. So we formed the trading range. So you can see that this is the buying area. The buyers are coming in here. The sellers are coming in up here. And we're expecting the price to just kind of move between this area for, a while. How we're going to know if this is a Wyckoff range is basically after the price moves through this area for a while, it's going to touch this bottom area a few times, and more people are going to buy. They're going to put their stop losses underneath this area in case Bitcoin drops. They don't want to lose any money. But these large buyers, they know that their orders are here. So eventually, after a few touches of this support, they're going to trigger a sell order. The price is going to fall underneath this area. There's going to be a lot of panic in the market, a lot of fear. People will be kind of freaking out. And the sign we're looking for that it's a Wyckoff range is after all that happens, the price is going to come back up into this area really rapidly, like almost instantly. And then we're going to come and bounce off this area. That's going to be the confirmation, and then we should see the price push back up to the top of the Wyckoff range. We should see a small pause like this and another breakout before the continuation upwards. So we already know that the big companies are buying Bitcoin still. We know that the general direction of the market is still up, which is also in our favor. And now we just have to watch and see if this range develops over time, because we've already got the initial signs of the range. So basically at the start of the range, we have the PSY. It's like a small pause before the first up move. And then we have a large sell-off. On this sell-off, Bitcoin actually dropped around nearly 30%. That's massive. So after a 30% drop, we instantly came back up. So that's definitely a shakeout. The shakeout basically means it's just going to knock all the people out of their trade. It's going to put everyone in fear. People who are using too much leverage, they're going to get liquidated. And then we're going to move on to develop the next phase where we start to touch the bottom area and then the spring. So that's just my thoughts on Bitcoin. I really don't see any signs that tell me we're going to head down. And even if we do head down, I think it's not going to be for very long. So my advice to you is definitely don't try and short Bitcoin now. And if you are brand new to investing and buying Bitcoin, you might want to consider a plan of how you're actually going to get into the market. You don't want to be one of these people that they go, all right, I've got $20,000. I want to invest in Bitcoin. It's 40,000. If it goes higher than 40,000, I'm going to buy in because it's going to go to 100,000. All right, you turn on your computer, it's 42,000. You buy, comes all the way back down to 30,000. You go, shit, I've lost $5,000. Or more than that, actually. You go, nah, this isn't for me. You sell out. At that moment, you can see the price goes the other direction. So that, it might be hard to believe for some people, but a lot of brand new people, this is actually how they think. They panic and they don't have a plan. So make a plan, learn technical analysis. These are just what are called support and resistance areas. And basically, after the price comes back to a support area multiple times, it can increase in value from it each time. Same as a resistance area. When the price reaches a resistance area, you can see it's got one touch, two touch, and on the third touch, usually we can see the resistance is respected and the price comes down. So you want to learn how to draw these areas on your charts, and you want to buy at these areas instead of trying to buy in random places, because it's going to increase your chances of success. So that's my video for today, guys. I just wanted to explain some of the important concepts for the beginners, and some important things you should know and be watching. If you enjoyed this video, don't forget to hit the like button and subscribe, and I'll see you guys on the next one. Thanks a lot.